Welcome back. Treasury officials reportedly looking into ways to temporarily guarantee all bank deposits. This is a tall order. They want to expand the FDIC insurance without congressional approval if this banking crisis gets worse. Meanwhile, the FDIC announcing yesterday that it is extending the bid window for Silicon Valley Bank entities until Friday evening. Joining me now, New York Congressman Andrew Garbarino. He is a member of the Financial Services and Homeland Security Committees. Congressman, it's great to have you this morning. We so appreciate your time. I want to get your take on this stress around the banks, and is it even feasible to think that the FDIC is going to support all bank deposits? What is this, socialism?
Well, first off, I don't see how they have the authority to expand it to cover everyone, and I don't see how they can. The Treasury Secretary is responsible and required by law to provide us a report on systemic risk by expanding the coverage to the uninsured depositors at Silicon Valley Bank as well as Signature. So to extend it to all depositors for every bank, I don't know how you do that because the banks are the ones that make up that cover these losses, not the taxpayers. So I don't see how you do this without extending the coverage to so that the taxpayers pick up the cost. I don't like the idea of expanding the coverage to all uninsured deposits. I don't see how you can do it either. I don't think it's practical.
Well, look, Treasury Secretary Janet Yellen keeps telling us how safe the banking sector is, but people just don't believe her. I mean, here we are looking at all of these rescue efforts. Credit Suisse has to be acquired by UBS in Europe. You've got Silicon Valley Bank. You've got Signature Bank collapsing. And now you've got Jamie Dimon leading big bank CEOs to try to save First Republic. And what's coming out of your committee? Ideas on new rules, more regulation. Massachusetts Senator Elizabeth Warren is now calling for more regulations on banks. Here's what she said. I got to get your take on this. Watch.
I'm calling for an independent investigation of the Fed and the whole regulatory system here. The Fed doesn't just get to do its own investigation. I'm calling for the Fed right now to reverse its weakened regulations and to bear down, to look at these banks with much more scrutiny. And then I'm also calling on Congress, as you rightly say, to roll back the ability of the Fed to weaken regulations and calling for these CEOs to be held accountable.
Well, I mean, was it not Elizabeth Warren years ago who was telling us that there were too many regulations on mid-sized banks and they need to be rolled back? The White House says Congress should not be let off the hook and needs to be taking more action. Congressman, what are you going to do in your committee, in the Financial Services Committee?
Well, in response to Senator Warren and the White House, the Financial Services Committee in the House next week is having a hearing specifically on Silicon Valley Bank. We're bringing in the FDIC. We're bringing in the Vice Chair of the Federal Reserve to find out what happened here. We're interested in facts. We're not interested in, hyperbole. We're interested in hypotheticals. We want to know the actual answers. And we're going to find them out next week and in subsequent hearings. This is about making sure that what happened to Silicon Valley Bank, what happened to Signature Bank, doesn't happen to the rest of the system. And I don't think it will, because I do think our regulatory framework is proper right now. I've spoken to a lot of experts. They think the current amount of regulations are perfect. They think they work well. Any additional capital requirements could actually hurt the banking sector and hurt individual borrowers by increasing cost and lessening the amount of money that is able to go out for lending. So right now, we're going to look and see what specifically happened with Signature, what specifically happened with Silicon Valley Bank, whether there were regulators asleep at the switch, whether Silicon Valley Bank didn't have the proper leadership, didn't have the proper risk officer in place for as long. So we think the regulatory framework is proper. Whether or not those regulations were properly adhered to by the FDIC, by the regulators in California, that's what we're going to be looking at next week. We want answers, and we're going to get them with our oversight.
Yeah, I mean, look, Silicon Valley Bank was focused on ESG and diversity and taking a cue from this Biden administration, putting safety of the bank on the back burner. Liz, you just wrote about Elizabeth Warren. It sure sounds like she's running for president with all these comments that she's calling on everybody to do something now.
Yeah, she's reprising her most famous role, Maria, during the financial crisis, the champion of the little guy. Look, what your committee needs to know, Congressman, and needs to explore is the fact that the regulators had all the rules and regulations they needed. And in fact, they knew almost a year ago that SVB Bank was in trouble, that they were breaching all kinds of safety guidelines in terms of their exposures, and that they had this gigantic hole, and they knew by the fall that they might have a run on the bank, and they told the CEO that. So the real question is, why didn't anyone do anything? Why didn't they step in and say, okay, you're fired, to the CEO or talk to the board and make sure that something happened? Because they knew it, he knew it, and yet nothing happened. And possibly having the CEO of SVB on the board of the San Francisco Fed, the supervisory organization supposed to be overseeing this bank, it was a travesty. And that's what happened.
Congressman,
no, absolutely. I mean, you look at the board makeup of these boards, and they're no longer experts in the financial field. I mean, they through ESG, they're putting on people who probably don't have the expertise to oversee what's going on with the actual C-suite, what's going on with the oversight. So I think Liz is absolutely correct. There has been in some of these banks, not all of them. There are some very good community banks out there. The big banks all just passed their financial stress tests back in June. So the banking sector, I think, is fine. But we have individual banks who were not following the proper regulatory framework, and regulators who, and we don't know why, but we're going to find out, we're not holding these banks to the standards that they should have been held to. So that's what we're going to be doing next week in the House Financial Services Committee under Chairman McHenry. We are going to get our answers. We're going to get them from the FDIC. We're going to get them from the Federal Reserve, and make sure that the proper oversight, both for Congress and the regulators, is upheld on these banks, and we don't have another run on the banking system like we had in 2008, 2009.
All right, Congressman, we're going to be watching your leadership and your work in the committee. And don't forget what we always say on this program, bad policy results in bad outcomes. Andrew Garbarino, good to see you, sir. Thank you.